oil jumping 2.5% today, and it's now up 5% in the last month. Last time he was on the show, our next guest said one oil ETF could triple if the rally continues. Now he says it's time to HODL the energy trade. Let's bring in Fundstrat co-founder and head of research, Tom Lee. Tom, great to see you.
Great to see you. So
saying HODL instead of just holding this trade implies that this is a trade that you really, really have high conviction in.
That's right. 2021, our top sector pick has been energy. It's been met with a lot of skepticism, understandably, because for the last virtually 13 years, energy's been just a source of misery for any fund and their portfolio holdings. But energy is emerging from this winter. And in some ways, I think investors' resistance to recognizing this change is a lot like Bitcoin in 2017, where in 2017, institutional investors were really skeptical of having any allocation to crypto. But one of the things that really helped them sort of cross the Rubicon was to point out that if you look at the 10 best days in Bitcoin, if you didn't own it for the 10 best days, you'd be down 25% a year. Well, we did the same calculation for energy, and you'd actually lose 30% a year owning energy without the 10 best days. For instance, even in 2021, the 10 best days for energy are up around 38%. And the other days so far this year, energy's down 1%. So almost all of the 38% gain for energy has happened in the 10 best days. So I think if investors want to get involved, they need to HODL energy, put an allocation there, kind of plug their nose, but I think that's going to deliver a lot to their portfolio.
Okay, I want to make clear, though, this also implies that you would put energy in your portfolio and not take it out. Because people who HODL something are holding it for life, basically.
Yes. In the time frame that I might say is even 3 to 5 years, I think energy has the potential to be transformative to someone's portfolio return. Because number one, as you know, oil is strengthening and probably producing some of the best returns and the best supply-demand dynamics we've seen in almost 15, maybe 20 years. Energy stocks, particularly OIH, the ETF, is still at a significant discount to where oil is. So OIH, which is in the 220 range, we think could get as high as 740 this year if oil gets to 80.
Hey, Tom, so I think back to 2014, when the Fed started to taper and what had happened, the dollar started to rally. And at that same point, oil started to crash. And from the highs in 14, oil went down 65% or something like that into 15, 16. Do you still HODL if the Fed starts to taper bond purchases at some point, maybe later this year, and starts to float trial balloons about maybe raising rates sooner than many expect?
That's a great question, Dan. As you know, whenever the Fed tightens or tapers, it's the equivalent of tightening. It's a headwind for all risk assets. So I think it's going to be incorrect for someone to say the Fed tapers and the stock market's going to brush it off. It's going to create turbulence. Now, that's a big if the Fed tapers. But I think that the crowded trades are the ones that are actually going to be suffering the most. So technology to us, which we downgraded to neutral about a month ago, is still falling on that slope of hope, whereas energy is under-owned. So I think if the Fed is indeed tapering and it hits risk on assets, I think it's going to be worse for technology.
BK, you got a question?
I do. So Tom, I'm long oil, and certainly the fundamentals support it. But if you're talking about HODLing, or what we might call diamond hands in the crypto world, which is HODLing it for too long here, how do you think about that when it comes to inflationary expectations? Because it seems to me that if oil is going to start to rally, and let's say it starts to rally towards $80, $90, $100, when does that inflationary issue come in, and does that then hurt equities?
Great point, Brian. As you know, they always say for commodities, the best cure for high prices is high prices. But we have to remember it really is because it starts to crowd out other spending. Gasoline today needs to get to around maybe $5.50 before it matches the $4 in the prior 11 years ago, when it actually created some crowding or hurt demand. So I think you've got a huge runway, actually. I think oil at 80 is hardly a problem. It's more of a reflationary signal. And again, I just think the market has already panicked and it's done the job for the Fed. One way to look at it is if inflation expectations are really strengthening, the 10-year should be much higher than its March highs. And in fact, at 1.6, it's still well off its March highs.
Yeah, that's something that we have all been puzzling about, certainly. Tom, great to see you. Thank you.
Great. Thanks for having me. Tom
Lee of Fundstrat. Guy Adami, I go to you. Do you agree with Tom's thesis? HODL.
Yeah, I do.
Energy
And we talked
stocks?
about this. Yeah, well, look, first of all, yes is the short answer, number one. Tim can talk about the incredible move in names like Schlumberger and Halliburton. I think Schlumberger still has room to the upside. And we've said this a number of times that if Tom is right, which I happen to think he is, the levered names are going to do really well. And PSX, by the way, it closed above 88.5, 89, and that sucker's 100 in a heartbeat. They're speaking at a conference tomorrow. But something dawned on me before we go to break. This is genius, by the way, and he happens to be a huge fan of the show. Brett Favre should do the ads for HODLers only on Wednesdays. And Brett, if you're watching, I'll share in the royalties because it's genius if you think about it.
Because it's okay. All right, Tim.
Yes, no, Brett's definitely a big fan of the show. Brett's also a fan of companies, energy companies that are investing very little in their future. How popular, or think about the politics around in some of these big CEOs throwing a lot of money into CapEx and OpEx. No, they're running their businesses for equity shareholders, for cash, for here and now. And the lack of investment means that these companies are going to be that much more valuable in 2 years. In other words, prices are going a lot higher. So EOG, Chevron, love Schlumberger. He's right on the OAH. I think it's going a lot higher.
Shepard Smith here. Thanks for watching CNBC on YouTube.